Mr. Mark Selby, how are you, sir?
Good, Mr. Matthew Gordon. Good to see you another week here.
Another week before you're dashing off to catch a little bit of sun. I'm a bit jealous.
Yeah, if you're going to sit in front of a computer, might as well do it somewhere warm as opposed to sitting in front of a computer screen somewhere cold and snowy. So that's the plan.
Have you? I know you kind of had a kind of bout of COVID go through the rummage through the family over Christmas. So you're good. You're safe. You've been avoiding people, good. So you can go on this trip.
Yeah, and in Canada, if you go out of the country and come back, you've got to get a PCR test each time. But if you had tested positive and you have your confirmation, it's good for 6 months. So it's like a free pass for 6 months. So
that's kind of cool.
Any Canadians who are listening who come down with COVID, make sure you get a formal test to get tested positive, and if you're planning to do any traveling in the upcoming year. So
that's very good. Very good. We were thinking of heading down to Miami for the BMO conference in the month, and a few things have happened. I'm not sure they're making announcements late as to who's turning up, who's going to physically be there, and I just wonder if how much of that was Canadians going, I'm not sure if I want to go through some kind of isolation period. What's the mood of the nation with Canadians as it goes with US?
I think people are starting to gear up to get going again. So I think if the cases keep coming down, I think there probably will be a decent number of people down there for in person for BMO. So
I think there's 0 cases of COVID in Florida, just so you know.
According to Ron DeSantis, yeah.
Correct. If you don't measure it, you can't get it.
Exactly.
Anyway, right, Nickel, world of Nickel. It's going to be short and sweet today. Going to talk about 3 things, a little bit about the market. We're going to talk about some of the EV numbers that we're starting to see and projections we're starting to see, and a little bit about a company we interviewed 2 years or so ago as a private company, now public, feasibility study out in the shape of Magna Mining. So when you hit us with those market numbers first.
Sure. So nickel basically is, traded either side at $23,000 a ton or $10.50 a pound, depending on what scale you use. So again, sort of well positioned above that $10 mark. What's really providing some strong support is, again, inventories all across the board are continuing to ratchet down. So LME stocks dropped 4,000 tons, down to 96. So got 24 weeks at that pace left. SHFE inventories were down another almost 1,000 tons to just under 3. So again, there's some real physical tightness in the market, and ore inventories, given as Philippines are off, we're seeing those drift down as well. The other part that's again supportive is after the massive spike in prices over the prior 2 weeks, and where the discounts for both sulfate and NPI ended up trading at a discount to the LME price. The sulfate has corrected itself. It's back at a $500 or $600 ton premium. NPI prices are still at a big discount, and again, I think we'll see those trading at a big discount for most of the year as we absorb additional NPI production out of Indonesia. But again, by the second half of the year, expect those things that gap to start to narrow down again, and nickel prices to move higher. I think the key thing here, the move before Chinese New Year took the market took everyone by surprise, including me. I would watch for the end of Chinese New Year this week. If the reason people stock up a little bit is because they think they've got too much demand or not, they can't see enough inventory in the chain, and so they want to make sure they come out of Chinese New Year with enough material. So if we come out of Chinese New Year and you see another move higher and inventories continue to tick down and premiums pop up, then I thought nickel prices, my forecast for the year is to come back down to 9, and then by second half start to move up. If we come out of Chinese New Year with a bit of a move, again, that I think there's potentially a lot more EV demand coming through that people just don't have visibility on, and I think that sets the stage for I think by the end of the year we'll be towards $11 to $12 a pound. We could see that by the end of February if they come out of the gate with Chinese New Year. So I would say between now and our next call, just keep an eye on things and what happens there. Now they could also come back and say, oh, you know what, we stocked up, everything's okay now, I don't need it. And so, that could be the catalyst for things to drop off back down towards 9. To be honest, right now, either one of those paths, is probable. But I think, we'll see. I think there's a slightly higher probability on the upside there.
I want to talk to you. Thank you for the update. And we talked. I think we talked about it last year. So it's the same thing. Chinese New Year is a big moment, right? But I want to talk to you about the market and investing behavior. Okay, I didn't say that at the beginning because I only thought about it when you were talking. I'm like, wow, that's good stuff. We're seeing the nickel prices, copper prices, lithium prices, battery metal prices, go through the roof, right? Go through the sunroof. And what is not happening is the equities are not following suit, right? There's a slight disconnect here. And I think there's some people are got various theories about it, but it does seem to link back in most cases to the fact that there's less disposable income predicted for people because governments are going to have to pay for COVID somehow. We as individuals, we've seen it in the UK, our national insurance contributions have just been bumped up. Thank you, Boris, for that. And for people, most investors, don't necessarily, they're not throwing hundreds of thousands of dollars around. They've got a small amount of money disposable for investing. And all of a sudden they're a bit nervous about, what the future holds in terms of what they're going to have to pay for the cost of materials in terms of inflation, whether it be supply chain or price gouging or whatever. We're paying more for our food, travel, and goods generally. Do you think that the kind of slight retrenchment from investors on that front, and the slight retrenchment from investors from the point of view of waiting to see what governments do in terms of big swinging moves, which may affect the markets, are companies like yourselves looking at the way value is attributed to you? Are you looking at it differently now? Do you think the pace at which money moves and the pace at which money comes into companies or sectors will be affected? Because even these, even like small 5-6% changes in behavior dramatically change the nature of the market. So do you have a view on that, or do you think that the demand is just overwhelmingly large and it will just plow through any kind of concerns investors have about the market?
No, I mean, we've seen, again, there's we talked before in terms of these disconnects that sometimes happen between commodity prices and equities, and we're in one of those periods right now. And so, no, I think it's, the market needs to get back into a risk on mode, to be able to say, okay, I'm going to buy a mining equity because I'm confident about the market for the next 1 to 2 years. I think, again, if you believe the commodity story, then these create, tremendous entry points. It's a little nerve wracking when you as an investor are buying when everyone else seems to be, have their hands on the wallets. But again, those are the times, to create some money, create some real value. And again, I think right now, particularly around the battery, some of the battery metals are pretty overvalued right now, but in the nickel space, the TSX nickel space, that hasn't really moved very much. ASX nickels, a bit of a different story, but there are pockets of value in here. And so, I think if you have a firm view on the commodities, now is the time to go shopping. And while interest rates, inflation, is higher and interest rates may go up, generally that's because, there's too much demand going on, and generally too much demand is never a bad thing for metals demand. So, there's a big difference between, if things are strong and they become a little less strong, that's not that problematic, right? So, I think, through the next 12 to 24 months, we should be still in pretty decent shape. I don't think anybody wants to tip the economies into recession at this point. So, to me, it's a buying opportunity in terms of, those, if you see a metal equity versus the metal commodity, and there's a big gap today. Yeah, I think it's worth starting to pick away at.
In the sense that, I think a lot of the commodity thematics seem to be being told we're entering a super cycle. Demand is going through the roof. Populations are increasing. Investment in infrastructure across the world is been signed off. We're doing it. We're going to need all of this stuff, right? In that context, you're saying it's almost like inflation proof.
investing
in metals.
Yeah. I wouldn't say it's inflation proof, but it's a pretty good, in terms of in a higher inflation environment, it's definitely a good place to, again, for the right opportunities for sure.
Okay. Talking of which, let's talk companies for a bit. I'm going to throw one in there, which I actually spoke to yesterday. I've spoken to a few times, and we had them on the nickel SocGen session, which was I think they're called the Metals Group now. They used to be called Deep Green.
So I
had them on yesterday, and I've always been slightly unsure about it, only because of this huge swell of opposition, and I kind of I'm still unsure for a bunch of different reasons now. So they kind of showed a video of the collection mechanism. So this it's like one of those sort of yellow caterpillar machines, which sort of tracks along the seabed, and then kind of like those tennis ball machines where you kind of roll over those wires and it picks up the tennis ball, scoops it up a chute to the boat and off for processing on shore. Easy, obviously, but I kind of got a little bit more comfortable with the science bit of we're not doing too much damage here, and I thought it was interesting. And I know you've been a big advocate. We need all the nickel we can get, right? You've always said that. Against anyone, we're pro everything if it's done the right way. They're saying is that they've got and this is the big change in the way they're positioning the narrative. We have the lightest touch mining extraction project in the world, if they can deliver it the way they think they can deliver it, right? So literally picking up nodules on the surface, not causing too much damage in this, deep ocean, 4,500 meters below surface. Science seems that they would say, independent scientists would say that, we're not doing too much damage here. And then a pyrometallurgical process on shore, and we can produce a matte. They showed me some matte, or other conventional routes too, and other conventional products too. And I just thought my only problem with the project is that it's so big, and they're consuming so much money, and it's taking so much time, and time is money, so they'll continue to take up so much money in this with this project that's the thing that's potentially going to cause them problems. I suspect in terms of ownership and dilution and all of those wonderful things, but the actual product. I know we talked about it with SocGen, but are you sort of hearing them as a viable near-term contributor to supply in the market, or do you? I mean, I'm trying to gauge, what impact they could have, because according to them, there's like billions of tons of this stuff down there. Pick it up like you're picking pebbles off the beach.
Yeah. Oh no, it's a massive. I mean, is no disputing it is a massive resource. And I mean, they're not digging a big hole in an area. They're sort of, it's a shallow hole across a much larger area. I think and I think, as I've said many times before, I think we need all the nickel we can get. The reality is permitting timelines and so forth for new pyrometallurgical plant. I mean, you got to finish the process, testing the process, designing the plant, get the plant permitted, and then get the plant built, right? So
that's way down here, right? So they've been focusing the C bit. Can we get the C bit right and spending the money there? And they've kind of got that bit, and I think I said in my summary yesterday that I think that the bit that's I guess they're not spending much time on because they don't know if they'll get permission to do this bit. Is what does it look like on shore? So new processes and new process plants just take time, right? So that's I'm not sure what their publicly stated timelines are, but that's just they take time to build. All those phases, and then ramp up something that's a new process just takes some time. So, they'll, if they can get the mining and get going, then maybe they'll get there sooner than later. But it's not like it's 24 months from now or anything like that. So I was kind of stunned actually by how overwhelmingly large the opposition groups are. There's 2 pages of companies and groups, NGOs and the rest, well funded, who are anti it and coming at it from different angles in different parts of the world. So it's not going to be that much different from conventional miners seeking permits and licenses in different jurisdictions around the world. But they've got all of them focused on that one project, because I guess the oceans are interconnected, so therefore they're concerned. The concern comes from all around the world, not just locally. It's a tough gig, but I'm a little bit more intrigued than I was. Not commercially, not throwing any money at it, but in terms of how they progress that story along. Because I say there seems to be a lot of metal lying on the seabed, which if we can work out how to do it, and people can wrap their heads around it, and governments will allow it. Will it be the lesser of two evils, i.e. running out versus disturbing the seabed?
Don't know. Time will tell.
Time will tell. You're being tight-lipped. I'll move on. Mag.
And well, to the other end of the spectrum is Magna, which was a great deal with Mitsui. So it's an MOU, but again, it's good to attention and good that they're able to attract. Mitsui's a big trading Japanese trading house, so it was great to see that. And again, I know people both at Mitsui and Magna, so I'm happy for them to be able to get to that deal. And again, in terms of the other end of the spectrum, this was a mine that operated briefly back in 2010, 2011. They're infilling the resource to get to a larger mine base. And the nice thing, that's different this time versus when the mine operated the last time is, you both have Vale and Glencore, who are keen to get feed. So, they're looking at building a mill there, but the opportunity to sell feed to both miners at a point where they're desperate for it, as opposed to 2010 where they were both pretty full, I think really changes the economics. And again, I'm hopeful and looking for them, to be able to advance that, because it's not going to be a huge amount of nickel, but again, it's nice to see another nickel producer emerge, and that's something that with the right funding could get developed relatively quickly.
Okay, here's one for you. I just saw a quote in response to the interview which we did last week. It goes, low grade won't absorb CO2, about your project. So there you go. Just thought you need to know that. It's low grade. I'm not sure if you're aware. Sorry. Really? Oh my God. I know. And
if someone figured it out.
And
there we go.
The science isn't there. Okay, I just need you to know that. So you may want to rethink things through. We will respond to that briefly, but because it was addressed at us. But look, I'm sort of intrigued to see how many sort of new players are going to come to the market as prices are rising. We've seen a few kind of high grade stories pop up here and there, but we haven't seen anything meaningful in terms of scale come through. I mean, are you aware of things maybe moving from the private into the public arena? Would that have scale?
No, there's not much. No, there's still very little. I mean, again, the Kabanga was something that's been sitting on the shelf for a while, and BHP made that investment in it, and then Anglo American with Sakatti is the other sort of big undeveloped sulfide resource that's out there. But that's I don't think there's any specific timeline in terms of when Anglo is going to get that developed. They've got some permitting. They're close to a sensitive environmental area, so they think they can get around it, but it's not something that's going to happen super quick.
Okay. Just let's go a couple minutes very quickly. What are the EV numbers starting to tell us in terms of projections?
First off, just I saw a beautiful Winnebago electric vehicle, which I know is what you've been waiting for to trade your Audi in. So I'm looking forward to see you and the family heading out on the roads in England in your electric Winnebago. And again, just to underscore that point, one of the key things is there's a lot of people waiting to buy that haven't got the right model. They haven't got their pickup truck or SUV that they want, and so there's a whole flood of new models coming to the market. And so again, the sales strength that we've seen. So, EV numbers more than double in 2021 versus 2020, and a huge amount of momentum coming out of the year. So if you extrapolate the quarter, you're looking at 30% growth already baked in for this coming year. If you just extrapolate December, you're up over 10 million cars, EVs being sold next year, which is more than 50% growth. So again, that's just taking that line and taking it straight. And again, as more new models come out, the Winnebago EV types, you're just going to see more, it's just going to give more and more incentive to consumers to switch. And in places where they have lots of options and lots of incentive, you're seeing some crazy percentages, in terms of, Europe sold more EVs than diesels last year. Germany's already 25% electric vehicles. And again, a lot of the targets for 2030 were, sort of a quarter of the vehicles would be electric by that point in time. So, I think we're going to be way ahead of a lot of people's forecasts. And again, nickel demand is going to surprise on the upside. So in terms of nickel use, when you look at the EVs, the batteries that are used in there and add up all the nickel in those batteries, it was more than 125% growth in 2021. So, LFP share went up. But the high nickel batteries also went up. And, again, in terms of the amount of nickel, just to sort of quantify it, it's almost a kilo of nickel per kilowatt of battery capacity for the high nickel batteries. And that's almost double, what the original NCM that were 1/3 nickel, 1/3 cobalt, 1/3 manganese. So, we've seen the market split to both ends, which is what we had talked about it happening from a demand perspective. And so, again, I think we're going to see some really, really robust demand numbers for the coming year. And again, that might be what is the big surprise coming out of Chinese New Year. If all of this EV supply chain's got a bunch of new orders from a bunch of car makers around the world, then, we'll see what happens.